This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Targeted and precise. President Obama says taking action in Iraq is still an option, sending shockwaves through the oil and gas markets.
Inflation nation. Federal Reserve Chair Janet Yellen called the latest data noisy. But how concerned should consumers and investors be about rising prices?
And big miss. Oracle's earnings disappoint. The stock tumbles in after-hours trading. And there's one key takeaway from the report investors need to watch. We have all that and more tonight on Nightly Business Report for Thursday, June 19th. Good evening, everyone. I'm Susie Garrow.
And I'm Bill Griffith, and tonight for Tyler Matheson. Always glad to be with you here, Susie.
Same here.
Chaos in Iraq has created turmoil in the oil and gas markets, as you know. And today, President Obama was very clear. The United States will increase support for Iraqi security forces, but he reiterated that American forces will not be returning to combat. The president's comments came as the Iraqi government tried to prevent an advance into Baghdad by Sunni militants. And while the president spoke, oil prices continued to rise. Brent topped $115 a barrel during the day for the first time this year, while West Texas Intermediate, the U.S. benchmark, rose a fraction to $106.43 a barrel. Michelle Caruso-Cabrera is on the ground tonight in Iraq.
After many consultations with his national security team over the last week, President Obama said today he is willing to take limited military action in Iraq, but only under certain circumstances.
Because of our increased intelligence resources, we're developing more information about potential targets associated with ISIL. And going forward, we will be prepared to take targeted and precise military action if and when we determine that the situation on the ground requires it.
He was quick to follow up and say that the number of personnel would be limited to only 300 military advisors.
American combat troops are not going to be fighting in Iraq again.
As he spoke, the battle for Iraq's largest oil refinery in Beji raged on. The Associated Press taking photos of smoke rising from the facility and of militants controlling checkpoints and a seized Iraqi Humvee. With the Beji refinery still inoperative, gas lines have grown even longer in the neighboring region of Kurdistan, where hopeful buyers waited hours and hours in line in 110-degree heat. This refinery in Kurdistan is operating at full tilt, but has the capacity to process only 100,000 barrels of crude oil per day, not enough to offset the 300,000 barrels worth of capacity lost at Beji. For Nightly Business Report, Michelle Caruso-Cabrera, Northern Iraq.
Now, the violence in Iraq is one reason why gasoline prices here in the U.S. are unusually high for this time of year, and experts say they could keep going up. Morgan Brennan has more on what drivers can expect when they fill up at the pump.
Gas prices are rising.
It's expensive, though. It adds up.
With the national average hitting $3.68 today, according to AAA. It's the highest price for this time of year since 2008, when gas topped $4 a gallon.
That's a lot more money. I mean, I drive over the bridge every day, and the company we work for, they pay a lot in gas, too, so it could affect our paychecks even more.
The increase is largely thanks to the crisis in Iraq, as the country's biggest refinery goes offline and oil companies like ExxonMobil evacuate workers. That's driven the international price of crude oil higher, and with it, U.S. gasoline.
It's pretty much guaranteed at this point that gas prices are going to continue rising over the next few days, given the fact that oil costs more and it makes it more expensive to produce gasoline.
Gas prices typically peak in the springtime as refineries go offline for maintenance, then drop lower in the summer, just in time for peak driving season. But analysts project that prices could keep climbing this summer. AAA says that won't cut into Americans' vacation plans, but it may affect other kinds of purchases.
Less eating out, for sure. More cooking at home, I guess.
Another factor that could push gas higher, a new bipartisan Senate proposal that would increase the federal tax on a gallon of gas from 18 cents to 30 cents over the next 2 years.
But with many in Washington facing midterm elections, passage of this proposal could be an uphill battle. Still, drivers can expect to feel more pain at the pump this summer. For Nightly Business Report, I'm Morgan Brennan in Fort Lee, New Jersey.
And on Wall Street, a slight gain for stocks was enough to send the S&P 500 further into record territory. It rose for the 5th straight session along with the Dow Jones Industrial Average, which at the close gained almost 15 points to 16,921. The S&P was up 2.5 to 1959. The Nasdaq, though, other direction. It fell by 3 points to 43.59. And investors flocked into gold today big time, sending prices up about 3%. Back above $1,300 an ounce. One reason cited, the dovish sentiment toward interest rates in yesterday's Federal Reserve statement.
Well, it's not just gold and gasoline prices that are rising, but just about everything. Federal Reserve Chair Janet Yellen didn't seem overly concerned about it at yesterday's news conference. But today, some economists say she's too complacent. They're worried. So how concerned should you be about inflation? Steve Leisman reports.
You can smell it in the grocery store, and you can smell it on an airplane. And of course, you can smell it these days at the gas station. The odor? It's a faint whiff of inflation wafting through the economy. Since February, inflation has marched steadily higher from 1.1% to the latest reading of 2% compared to a year ago in May. It's still low by historical standards, but in this economy, it hurts consumers more because wages are rising so slowly. And there could be more to come. The latest geopolitical uncertainty in Iraq has driven up oil prices, meaning it could cost more soon to fill up your car. Janet Yellen, the chair of the Federal Reserve, whose job it is to fight inflation, thinks it's all just temporary. The Fed is calling for a gradual rise in prices over the next several years to its 2% target.
I think recent readings on, for example, the CPI index have been a bit on the high side, but I think it's the data that we're seeing is noisy. I think it's important to remember that, broadly speaking, inflation is evolving in line with the committee's expectations.
But some economists aren't so sure it's noise. They're more worried about recent price gains.
It is noisy, but there is some stuff going on there that I think they're kind of deliberately downplaying. And I'm worried now they're going to find themselves blindsided as inflation picks up further through the second half of the year. And then they're going to have to scramble. And that's when the markets get upset.
To be sure, the Fed tends to look through such events, and it was right not to react to price gains in 2011 and 2012 as they gave way to lower inflation in 2013. Yellen says she's not going to worry much about inflation unless wages rise. Even then, wages have been stagnant for so long, they'd have to rise a lot to get the attention of the Fed chair. The trouble is that if inflation hangs around and keeps rising, the Fed may not be able to ignore the smell for very long. For Nightly Business Report, I'm Steve Leisman.
Well, certainly inflation is something that investors also need to pay attention to. Dominic Chu now looks at what rising prices could mean to your investments.
When it comes to the stock market, certain sectors and industries will fare better than others in an inflationary environment.
Consumer stocks are very good for a bit of inflation, a little bit of pricing power. Industrial stocks are also excellent, as well as energy stocks. The stocks probably least likely to perform well would be financial stocks, utilities that really depend on the short-term market.
But the story doesn't end with the stock market. Gold is also on the rise as investors buy it as protection against inflation and geopolitical unrest in Iraq. As a result, gold mining stocks have been a recent beneficiary. One exchange-traded fund that tracks the industry has been languishing over the past year, but has surged around 17% in just the last 2 weeks alone. Other assets like bonds could also see a big impact from an inflationary environment. Bonds tend to lose value in times of rising prices and rising interest rates.
I think the bond market is a risky place, and I think people don't realize how risky bonds can be. If you look back at 1994, for example, the Fed raised rates 7 times during the course of that year, and bonds actually lost people quite a lot of money.
Of course, just because the recent trend has been for higher prices, that doesn't mean everyone thinks it's a longer-term phenomenon.
We actually think that the developed world, anyway, is in a period of sustained deflation. And the companies that have been very successful for us in that environment are those that are driving their costs down lower and selling products that can actually save their customers money.
So, regardless of what you have in your portfolio, many experts believe that now is the time to get a game plan in place, just in case inflation becomes a bigger problem. For Nightly Business Report, I'm Dominic Chu.
Some positive news for people looking to buy a home and to get a mortgage. The average rate for a 30-year fixed-rate mortgage fell slightly from the prior week to 4.17%. That's hovering near historic lows.
Well, certainly one person who closely watches mortgage rates and all kinds of interest rates and their impact on both consumers and American businesses would be Frank Keating. He's currently president and CEO of the American Bankers Association. Of course, he's former governor of Oklahoma as well. Governor Keating, good to see you again, sir. Welcome.
Thanks, Bill. Susie, hi.
Do you think that the housing market right now is in such a state where it could withstand an appreciable rise in interest rates?
Well, I think the artificially low rates and the very low rates for first-time home buyers, single-family home loans, I think those could go up and people still would find the price of a house and the rate to borrow to buy that house to be appropriate. The difficulty is that the house price itself is going up, even though the rates themselves are still low and I think attractively low. So a combination of rising house prices, a modest recovery, obviously young people with a lot of student loan debt, and very rigid mortgage rules, we've seen less activity than we would like to see. But this is a great time. This month is a housing month in America, is a good time to buy a house with very, very low rates.
And yet, Governor Keating, we always hear from people anecdotally that how tough it is to get a loan, even if you have a good credit score and you have a good credit history. From the big banks that you talk to, the regional banks you talk to, do you see any of that changing anytime soon in terms of qualifying borrowers to get a mortgage or any kind of interest rate loan?
Well, I think all of us know that the only way a bank makes money is by making loans. They pay their employees, they pay their stockholders as a result of making loans. But the rules the Consumer Financial Protection Bureau has applied to this industry, the qualified mortgage rule requiring 43% debt to income, there are a lot of people that simply can't meet that. To be a QM loan, for example, to have your dad or mother to co-sign the loan, to do some creative financing and have the owner collateralize a portion of it, that's not a QM loan. So what we're looking for is some sanity is perhaps too extreme a word, but some understanding, some creativity, an opportunity to really look at the borrower and get creative about the financing. But if we could do that, then I think you'd see a lot more housing activity.
There are those who feel there's a dire trend going on, and you alluded to it, with those young people who are saddled with the student loan debt, which totals more than $1 trillion these days. There are those who feel that maybe there's a lost generation that's not going to be able to afford a home for years to come. Do you think that's the case, and what do you think that does for housing down the road?
Well, the first home I bought was a duplex, actually, when I was 27. Today, it would be 37. Young people my age back then, we all were trying to buy houses in our mid to late 20s, but now you can add 5, 6, or 7 years to that. Now, why is that? Well, student loan debt's a part of it. The absence of creative financing, the expense of a home compared to your income back then and your income now, it's a much higher percentage of your income, but it still is a savings account. I think a home is a great investment long term, and I would hope that we would get some rationality in some of these regulations so young people would have a shot at it, because right now they don't, and they may have to wait till they're 37 to get their first home.
Yeah, that's about the case. Former Governor Frank Keating now with the ABA. Thanks for joining us. Good to see you.
Sure enough.
You bet.
Still ahead on the program, investors in retailer Coach are looking for signs of a turnaround, and today they got just the opposite. Details on why the stock was one of the worst performers on the S&P 500. That's coming up.
Well, a big miss for Oracle. After the closing bell tonight, the company reported earnings and revenue that were below Wall Street expectations. The company earned 92 cents a share in the fourth quarter. That was 3 cents below estimates. Revenue came in at $11.3 billion, also slightly below what analysts were looking for. And investors, as a result, sold the stock in after-hours trade tonight, pushing shares sharply lower in those extended hours. down on the day. Seema Modi has been following that story and just has the latest right now. What do you see as one of the key takeaways for investors on that report?
Well, Bill, this was definitely a disappointing report from Oracle, particularly sales of new software licenses coming in lower than expected. Keep in mind, large cap tech stocks like Oracle have been in favor this year. In fact, Oracle up about 8% over the past 6 months. But due to this disappointing report, specifically around software licenses, you're starting to see investors question the investment thesis around old cap tech. Now, while the bulls are saying Oracle is still sitting on a lot of cash, it offers a dividend, and it's buying back stock. So that in itself is a reason to stick with old cap tech, some experts say. So expect to see this debate come to light in the coming days around whether old cap tech is a good investment. Back to you.
All right, Seema, thank you. And Oracle and its rival SAP are two companies that battle it out every day in the business world. We will compare those two in our Ultimate Stock Cup. That's a little bit later in the program tonight.
A big sell-off in Coach after the luxury retailer gave investors a gloomy outlook, and that's where we begin tonight's market focus. At its Investor Day meeting today in New York City, Coach said it expects revenue to decline in the low double digits for fiscal 2015. Coach also plans to close 70 of its underperforming stores. The stock tumbled almost 9% to $35.69. Well, it was the opposite story for BlackBerry. Shares of the smartphone maker surged after reporting a smaller than expected loss and revenue that beat estimates. The company says it spent less cash than expected, and its gross profit margins were up from last year. BlackBerry CEO John Chen says the turnaround plan is right on track.
I have confidence we could break even or actually even make money out of the devices. Next fiscal year, we should start seeing the turn to profitability by growing. So today, I'm focusing on balance sheets. I'm focusing on generating cash.
The stock popped more than 9.5% to $9.09. Kroger also out with strong earnings. The supermarket chain reported a 4% jump in first quarter profit. It also upped its earnings forecast for the year. Shares rose almost 5% to $49.66. And shares of Pier 1 plunged after its quarterly results missed estimates. The retailer cut its guidance for the year and warned of continued margin pressures because of a highly promotional environment. The stock tumbled 13% to $15.86.
Well, financial information company Market saw its shares jump in its trading debut today. The initial public offering raised more than $1 billion after pricing its shares at $24 a share. That was in the expected range. Company provides pricing and reference data as well as index and valuation services. The stock rose 11% in its debut to $26.70. Meanwhile, billionaire investor Carl Icahn's at it again. Now he's calling for Family Dollar to put itself up for sale immediately. Mr. Icahn disclosed a stake in Dollar store chain earlier this month. He said that an overwhelming number of the company's shareholders would be in favor of a sale and that 3 of his representatives should be added to Family Dollar's board. Shares were down a fraction during the regular session today to $68.14, but after hours, when that letter from Icahn was released, as you can imagine, the stock jumped at that point. We have another update now on General Electric's multi-billion-dollar offer to buy Alstom's energy business. GE has now presented a revised proposal to the French government, and under this new terms, GE would form 3 new joint ventures and would sell its signaling business to the Alstom Group for an undisclosed price. The deadline for the offer to either be accepted or rejected now is June the 23rd. Shares of GE rose a fraction today to $26.93.
An agreement reached today in New York State to legalize medical marijuana on a limited scope. Governor Cuomo and legislative leaders agreed to make certain forms of the drug available to patients who suffer from diseases such as cancer and AIDS, but it won't legalize smokable forms of the drug.
So what deserves a patent and what doesn't? The Supreme Court made that a little clearer today. The justices ruled that you cannot take an idea that's not that original, figure out how to do it on a computer, and patent it. In a unanimous decision, the Supreme Court said a company called Alice Corp should not have been issued a patent because the company took an idea that had been around for years and then ran it through a computer. Got that?
Also in Washington today, a new leadership comes to the House of Representatives. Congressman Kevin McCarthy, a Republican from California, was selected to serve as the next House Majority Leader. McCarthy was chosen in an unusual election that was triggered by the surprising defeat of outgoing Majority Leader Eric Cantor. Louisiana Congressman Steve Scalise will become Majority Whip. That's a post left vacant by McCarthy's promotion.
Coming up, soccer fans, of course, have the World Cup. Will investors have NBR's Stock Cup? And tonight we compare Oracle and SAP, two of the business world's biggest rivals.
The U.S. and Germany are looking to advance in the World Cup and will battle each other on the field next week. So tonight in NBR's Ultimate Stock Cup, we're looking at the U.S. versus Germany in a different way. The rivalry of two software giants, Oracle versus SAP.
The flamboyant Larry Ellison, one of the world's wealthiest people, twice a college dropout and twice a winner of the America's Cup, co-founded a software company in 1977. It later became Oracle. Now headquartered in Redwood Shores, California, its 2013 revenue more than $37 billion. The company was formed to build a database manager for the CIA, a project codenamed Oracle. That work changed the way businesses do business. When corporate IT departments run into trouble, they call Oracle. Its programs have simplified inventory, shipping, and supply chain issues, and is the world's second biggest software maker after Microsoft. Since 2004, it's focused on enterprise software tailored to individual businesses. That's where Oracle competes with SAP, systems, applications, and products in data processing. Founded in 1972 by 5 engineers who left IBM, it's headquartered in Waldorf, Germany. 2013 sales topped $22 billion. Its key innovation, creating large data programs for financial accounting, helping to move the world past the days of punch cards. Now, SAP, like Oracle, is finding growth not by forging a new world, but by adapting, reaching into the cloud, mobile, and finding ways to handle big data.
Dan Morgan weighs in now on the Oracle-SAP rivalry. He's Senior Portfolio Manager at Synovus Trust. So, Dan, who's the stronger player here, and what's the key reason for your choice?
Well, we're holders of Oracle. We have over 1 million shares of the stock, and that's the stock that we've been involved with from an investment perspective. Kind of going back to some of the things you featured in terms of their dominance in the relational database area. And one of the key things is their ability to acquire other companies. And obviously the cloud is a big issue going forward. Who can get there quicker is going to be the winner between these two companies.
Who does? I mean, you know, smaller, more nimble companies, Salesforce and others have beaten them to the cloud in many cases. So are they playing catch up, or what do you think?
Well, they're being forced to go to a subscription model opposed to a licensing model, and both of these companies are trying to get there. And you know, the key is, you know, who can get there the quickest in terms of either acquiring it or building it internally. And you're right, Bill, both of these companies are being forced to go into areas that they would not normally want to go into.
All right, so
but they have to.
So, Dan, you talk about acquisition versus building within. Oracle done hundreds of acquisitions. SAP, just the opposite, build within. Which is the smarter strategy?
Well, that's why we like Oracle. They have such a great history of acquiring companies. Your viewers probably remember PeopleSoft, the big deal they did to get into enterprise resource planning software to compete directly against SAP, you know, 10, 15 years ago. So that's a prime example. It's two different strategies. We just favor the strategy of acquisition. They have done a great job in terms of when they're done with the acquisition, integrating the new company. And that's a big part of why we're more bullish towards Oracle.
How much of this is all about Larry Ellison as well?
Well, the Larry Ellison, you know, I don't want to go there in terms of his ego, but yeah, it's a lot about Larry Ellison, and he's been there forever, and he's a good CEO.
But he won't be there forever. That's the question.
Well, yeah, that's true.
He may tell you differently, but
Yeah, well, he's going to live forever, right, Bill?
Right.
Yeah,
yes.
but you're right. But he should be able to help them through this transition into the cloud. And you probably have read some of the highlights out of SAP. They lost some key people over the last couple of months in their initiative in the cloud, and that's something that their CEO has had to really answer for.
Both Oracle and SAP were the big innovators way back in the 70s, 80s, and 90s. But looking ahead in the next 10 years, are they going to be the innovators, or is it going to are they going to have a place on the global stage, or are they going to be overtaken by the upstarts that Bill was alluding to, Salesforce, Workday, companies like that?
Well, they are the all mature cash cow companies. And you're right. It does appear that some of these other companies are beating them to the punch. But we have to remember that they have these huge installation bases. Oracle has 400,000 customers. So they have an advantage over Salesforce.com and Workday because they have such a built-in customer base that they can then leverage to sell these products that they create. So they do have an advantage from that perspective. But you're right. They're a little bit behind in terms of kind of catching up right now.
All right, Dan, thank you so much. Dan Morgan.
Okay, thank you.
With Synovus Trust.
All right, there. So you just heard which stock our guest prefers. Now we want to hear from you. Is it Oracle or SAP? You can vote on our website at nbr.com. And in the meantime, we have the results from Tuesday's Global Rivals Challenge, where we asked you to choose between Apple and Samsung. The winner, Apple, by a wide margin. 66% of you chose Apple.
I'm not surprised.
I'm not surprised either.
And our guest that we had on that subject, David Garrity, also said Apple was the one.
It's back on the rise again. That's it.
That's it for us. Nightly Business Report for tonight. Thanks for joining us. I'm Susie Garrow.
I'm Bill Griffith. Have a great evening, everybody. We will see you tomorrow.
I'm Susie Garrow with a Nightly Business Report news brief. On Wall Street today, a slight gain for stocks, but it was enough to send the S&P 500 into record territory once again. At the close, the Dow gained almost 15 points, the S&P up 2.5, but the Nasdaq went in the other direction, dipping 3 points. And investors flocked back into gold, sending prices up 3%, pushing past $1,300 an ounce. One reason? The Federal Reserve statement yesterday to keep interest rates low for the near future. Brent crude topped $115 a barrel for the first time this year on continued unrest in Iraq. The average rate for a 30-year fixed-rate mortgage fell slightly to 4.17%. And software maker Oracle posted earnings and revenue way below Wall Street expectations. Be sure to tune into Nightly Business Report right here on your public television station.